Does the market crush you? Hi, it's Charlie giving you Wednesday's video. I hope you're very well. Today I'm going to go through some examples and talk about how the market is always trying to test you. No matter what your style of trading, whether you're right the way down to trading, scalping off a 1 minute chart, or you're a swing and position trader holding positions for potentially months at a time, the market will test you over and over and over again. That's what the market's going to do. It doesn't matter what your style is. If you're trading, taking 10 trades a day, the market will test you at times, and you'll have those days where 10 out of 10 trades will lose, and likewise for swing traders as well. So whatever your style is, there is no holy grail. But before I go into that, let's talk about how the market can crush you, i.e. testing you, and what you need to do if it is testing you, okay? Because let me go through an example with you. I'm going to go through some examples from last year in the euro dollar contract here. Let's have a look here. Yep. I'm just trying to bring it on for last year. There we go. So I've got price action here for the last year. So going into 2023, I'm just going to talk personally about the overall trading that I was doing. And I'm going to show you how the market can really test you. So coming into the back end of 2022, had a nice run to the upside. So that was good. That made a fair bit, as actually it was my biggest trade of 2022, that last one, fun enough. Anyway, so then we get into 2023, and during this pullback zone here, I was buying. By the time the euro had got up to this zone up here, I was in a significant amount of profit. I can't remember in actual pounds terms at that time, but it was decent. It would have been between 50 and 100,000 at that point. It just missed out on my first target up at the top there. It was literally a few pips away from 111, which was a technical level I was looking at, was just a bit below 111 as a target. Anyway, so it missed out there, rolled over, so that one ended up just stopping me out, basically making nothing out of that trade. Anyway, then down in this zone, nothing had overly changed. It was just a larger retracement, which I got trading stopped out of. So then got long again. And so through here, and of course, and that held all the way up. So at this point, I was up well over 100,000. Did bank some profits, to be fair, in the 112s. So there was some profit taking, but the market rolled over and I got trading stopped out of that one as well, having been up a significant amount of money in open positions there. Then the irony was that somewhere, I'm trying to see where exactly it would have been, down here somewhere in the 110 zone, I got short. There was reasons to short the market at this point. We'd seen these rollovers, and so there was a technical reason to short. And the irony was that short was my trade of the year. So that's the one that made me the money. Just one overall trade. Okay. Although, of course, I add into trades as they go in my favor, but overall, that overall trade was what made me my point, so to speak, for the year. However, the year wasn't over at that point. We got down into October, into these lows down here, and I started getting long down in this zone. So right away down, somewhere off the lows. I'd already tried to get in, but overall that was what I was trying to do. And at this point, we'd had a great run all the way into late December. At this point, I was up over 150,000 in open profits. And guess what? Yep, we rolled over coming into January, and that then trading stopped me out as well. So what is the point I'm trying to make here? It's not that, oh, Charlie, you're doing it wrong. You're not banking your profits soon enough. Well, with the benefit of hindsight, that's easy to go on. Bearing in mind, the euro dollar did about half its average yearly range last year. So just half of its average yearly range. So taking on all sorts of factors at play, if it was going to be running, it had plenty of opportunity to run higher. And I had technical levels that I was looking for. The dollar and the euro dollar just got stuck last year. So A lot of traders would look to adjust. And this is where it gets interesting. That's why I say the market will test you, the market will crush you in two ways. One is that emotionally, a lot of traders would not deal with this sort of thing very well. To be in substantial open profits, I'm talking to you about these numbers because I think it's to tell people the sort of numbers that I was in. It's quite shocking to people, and they're like, oh my god, that amount of money. Yeah, and even to me it would still be nice to have banked it, of course. But it doesn't really matter what the number is. If you're in a nice open profit and then it rolls over, the potential for that to really hurt you is there. But that's just the market testing you. And during that phase of 2023 and even coming into 2024, the euro contract is overall in a nicely, I can say it with the benefit of hindsight, a nicely arranging sideways condition. Okay, but it's well within its overall average, which is about 1,600 pips is its normal average yearly range. Last year it did about 800 and something pips, so it did about half. So what often happens is a trader will try and fix it. They will look to a fix. So they'll take these relative few scenarios and say, right, I've got to fix this. Well, hold on a second. That actually is what? One trade there, effectively, two trades there, three trades there. So you're going to go and try and make all these adjustments based on what? Three overall trades? Looking at that. No. That is you as a human being reacting to the market. You have to learn to let go. No matter what it is, I'm just using that as an example, but it doesn't matter what the market is doing. You have to make sure that are you reacting to the market when actually there's nothing wrong, it's just circumstance as to what's happened with your trades, or is there a genuine issue? So I know, because I've been doing this a while, this trading stuff, that I'm going to have to put up with, if I'm trading, when I do get into trades, whether it's on the euro or the pound dollar or the S&P or whatever the market might be, if I'm taking trades and that I want to hold on for a reasonable length of time, I have to accept a lower win rate. That's the byproduct. However, when the wins come through, they are significant. So like some of those open profits, which were insignificant R multiples at that time, but that's just the way it goes. So you don't have to go for those mega risk reward ratios. However, they are, when they do come through, which they do, they more than make up for any losses that you have. So if you just react, then all that happen is the next trade that comes along, you get in and you're like, no, I'm not going to hold on to that one next time. What happens is you bank your profit at 2R or whatever it might be, or 3R, and of course it ends up going and being a big one. So you just need to make sure that you're staying with your plan and you're not reacting to what the market is doing, because the market is just, if you gamify it, as I always say, well, yeah, it's just the market testing me. That's all it's trying to do. And no matter what your style is, it will find a way to poke holes in what you're doing. And if you then start reacting to it, which is a natural thing that traders do, thinking, oh, I've got to tweak my strategy, my approach, whatever, the market's won, because then you've tweaked and then you're going and doing something else, and then there might be issues with that as well. So to a large extent, you need to trust your process. Okay, if you're trading a mechanical strategy, you need to put some trust in it. Have you back tested the mechanical strategy? Is it trading within the parameters of its historical testing data? If it's trading outside of those parameters, well, what have you said is the maximum that if it comes outside of those parameters that you will, where the maximum where you say actually there might be a problem with this? And so there has to be some, if you're going to trade mechanically, with a strategy, then you have to have some rules to say, well, actually, back tested, it done a maximum drawdown of, let's say, 10%. Okay, well, in the future, we've got to allow for it to do maybe a maximum drawdown of 15%, let's say. And if it goes beyond that, then at that point you turn it off. What do you do? So that all comes under your plan. But up until that point, you've got to trust in your system, in your approach. And so you have to let it go when the market is testing you on whatever it is you're doing, and just gamify it and say, the market is testing me here. I can't afford to allow the market to win in this regard and for me to start making massive adjustments. Now, I have to counter what I've just said by saying, well, it could be that you've got a problem. It could be there's a problem with your approach entirely, etc., etc. And that's why you do have to review, but be careful not to start curve fitting just because you've had a few losers or whatever the situation might be, a few stop outs. Like in my example I've given you here today, as much as through last year, with the benefit of hindsight, would have been lovely to have banked it all there and banked it all there. Oh, okay, I got the short, so that's fine. And then banked it all there as well. Of course, that would have been lovely. Ideal with the benefit of hindsight, but in years to come, there will be years where I catch these, whatever the market is I'm trading, I'll catch a mega trend. In fact, some of my traders in our community have been in gold and have had some massive runs in gold of late. One of our members was just saying on Friday he's up 35R, and I think he was banking last Friday as well, whilst up that amount, 35R. So I'm not saying that's what you have to be looking for. That's just what I encourage within our community, is to look, encourage people to at least identify when there is a situation arises where there's a multiple R possibility where you can add in. Then we do a lot of that sort of stuff. So, and they pay for a lot of losing trades and profit on top. So what's the point? You need to let go of what the market is trying to do. Just always remember, the market is trying to get you to make mistakes. And the better you get at letting go, and this is why I spend so much time in my community in the trading room on the mindset side of stuff, with all the trades that I'm doing and members are doing and stuff, that we talk about that stuff so much, because the better you as an individual get at letting go of all the potential emotions that you're gonna otherwise feel from trading the markets, the better you'll be at trading. And that is my Wednesday video. Have a lovely week. I'll see you at the weekend.